friends for probably 20 years now, and we like to be the yin and yang and so you can always look to me to have a positive, optimistic outlook, and we call him Darren Downer.
The way I characterize the market is the market has bent but not broken. We definitely saw that there was a concern about the real estate market.
That's an important point Darren just made. We didn't have a housing market crash. Sales fell off a cliff, obviously, but prices didn't. But we did have a correction, and this has been a very, very localized market correction.
I would love to hear your thoughts on whether you're seeing that expand to other segments of the investor population.
Are we supposed to let Andrew talk too? Oh, okay.
Best is always last. As a banker, we deploy capital for real estate investors, both fix and flip, fix and hold, ground up construction, multifamily, and small and medium lot development. So we're very sensitive to where housing price appreciation will go in the marketplace. From our perspective, the housing recession is in the rearview mirror. It already happened. You know, I'm an old school banker. I put on my boots, I put on my dicky pants, and I get out there in the field and we smell the dirt, you smell the nails, you smell the wood, and you see what's happening. And that's the thing I would implore upon all the investors in this room is go street by street, go community by community, and enclave by enclave, and you will find where the real opportunity resides.
I saw the market start coming back. You know, you can see more offers. I have broker's license too. I don't do a lot of broker, but I talk to them a lot. And then people didn't really believe it. People still waiting for it. But now in Orange County, it's the lowest inventory ever in history, and the price is going crazy. I put on market Thursday night. It went to escrow the next Monday. And we got a buy couple offers. So the market, the coastal area, the desirable areas is very, very hot right now. And the investors, the same thing, you have a couple of, so which is good. So I like to hear what you said. The recession is already in there.
Well, that would be a good turnaround because last quarter we had the lowest number of flips in over 2 years. So there were about 70,000 properties that were fixed and flipped last quarter. That's four, to use Darren's favorite expression, that's 4 quarters in a row where the numbers went down. But there was an encouraging sign in the fix and flip data.
To fill my Debbie Downer role here, I'm a little bit concerned that this is a little bit of a false bottom, and that yes, the second half of 2023 will look good, and maybe the first part of 2024. But still, if you look at fundamentally, we are in a little bit of a bubble. You know, I hate to use the word bubble in terms. I don't know if you guys would agree with that. But
I don't think we see a crash price-wise, and I don't think you just said crash either. But correction. How I think this plays out is we have several very unexciting years in a row. To Darren's point, prices went up really, really fast. I don't know if I'd call it a bubble. We really can't tell if it's a bubble until it bursts.
What I like a lot right now is I'll refer to it as small and medium lot developments. I also see a growing opportunity within infill construction where we're seeing in certain neighborhoods. I do see opportunity for what I'll call that fix and hold, where you may have been fixing to flip the house for that first time home buyer, fix it and hold it as a rental, because the rental demand for that size home for a first time home buyer that can't buy that home is very much opportunity.
Andy, are you seeing much wholesaling? And about 20% of them said they were doing wholesaling.
I think there's a lot of opportunities going forward in the second half of 2023 and into 2024. But I would just say the implication of the possibility of it being a little bit of a false bottom and there could be a further fall is you just need to proceed with caution.